Hey guys, looking at the charts of the major indexes, it looks like we're going to roll over for a bit. It's easy that we could gap fill back down like 3.5%, for example, with the S&P. We have negative divergence. We had selling at the end of the day. We obviously had the Treasury auction at 1 p.m. Eastern time that did not go well, and we saw a sharp sell-off quickly and then a slight rebound. Then at the end of the day, more selling straight down. And we know who likes to do that at the end of the day? Institutions, guys. So the signs are on the wall here, or the writing's on the wall, that stocks could roll over. So you don't need to be a hero. If you do want to trade, focus on the companies that get fresh positive news. We saw what happened with Navitas, for example, went up huge. I'm not saying to chase that. You will definitely get a better entry point if you're patient with that, especially if the indexes do roll over, okay? But I mean, I'm playing Webull, for example, with profits because I trimmed twice in the 13s and then I actually bought a little bit more when it came back down to $12.60 today. So I'm willing to go in, since it's profits, with a small position into earnings tomorrow after market close, Thursday. And so if they can just beat and raise, that would really help the stock. But if they miss, of course, it's going to go lower. So that's why it's like gambling, as you know. But again, the signs point to stocks rolling over after a healthy rally. And remember, we have Memorial Day weekend, and it's an extended weekend. So there's not going to be people rushing in to buy, okay, with Memorial Day weekend coming up. And we need a catalyst. So NVIDIA's earnings are the next catalyst, and that's Wednesday next week after market close. Maybe you can get a little dip, going into that. If it went back in the 120s, ideally under 125, that would be great to buy more with NVIDIA, okay? You guys know we were buying this in the 80s and the 90s and the lower hundreds. So hopefully you guys got some shares while it was beaten up with NVIDIA. But anyways, and then also the, like I said, the 30-year Treasury yield being over 5% is a problem too, because big money like institutions, pension funds, may consider just parking their money there when they're getting over 5%. That's that psychological level versus, risking it with stocks. And so, especially after the healthy rally we had, this could cause a little bit of a dip. Long term, nothing to sweat, guys. You just keep holding. And remember, you don't even have to look at anything. I'm going to alert you with the good dip buying opportunities in the Millionaire Maker portfolio. And I can tell you it's not going to be anytime soon because these have already rallied big. I'm waiting for the next big drop, okay, where we can add to the Millionaire Maker portfolio. So I'll let you know, obviously, alert you when the time is right. But like I said, right now we've had that rally. There's nothing wrong with selling out in your short-term account. Lock it in, raise some cash. That's what I'm doing. I got more cash down the sidelines so I can wait for good opportunities or stocks that have that fresh positive news. If you catch it in the pre-market, it's nice to jump into those, and play it and win really quick on it. I'm not overstaying my welcome though, now that I'm seeing these indexes roll over. I'm going to be smaller positions when I play things. And then when NVIDIA's earnings come out, if they do crush it, then what's going to follow. The semiconductor and AI stocks are going to rise with it, okay? But if they miss, again, China we know is an issue. They say they're missing out on 15 billion in sales because of these chip bans. And it wouldn't surprise me if they show decelerating growth again, because it's hard when you're, comparing off of last year's numbers, which were big, to show accelerating revenue growth. So that could provide, a dip at first. We know anything can happen around earnings. So the moral of the story here, guys, you don't need to try to be a hero right now. Markets look like they're going to roll over. There's negative divergence, a lot of signs pointing to a little pause in the rally, unless we get some fresh positive news from Trump or these Treasury yields fall back down under 5%, right? Or if it's not any of those, then we'll have to probably wait till NVIDIA's earnings.